Hello everyone, my name is Ratna Dubey and today I am going to start with the topic types of accounts and their golden rule. There are two types of accounts, that is personal or impersonal. But impersonal account has been divided into two parts, that is real accounts and nominal accounts. So in nutshell we can say that there are three types of accounts, that is personal, real and nominal accounts. In personal account, we record any kind of transactions which is related to any natural or any artificial person. Now, what is artificial legal person? That is any organization or any company, any schools, university. That means any kind of organization which is registered, that becomes my artificial legal person. If I say any shop's name or any other company's name, that also becomes an artificial legal person. So in personal account, any kind of natural as well as artificial persons accounts are recorded. Now real account, in real account, goods and assets related transactions are recorded. Suppose if I say I purchased goods or sold goods, then all these types of transactions are recorded in real account, that is purchase return, sales return. Any kind of goods related transactions are recorded in real account. Also, if it is related to any assets, that also recorded in the real account. Now, nominal account. In nominal account, all the expenses or any income which happens to be arise in the business operations or day-to-day business operations, that type of transactions are recorded in nominal account. Now, what are the rules for all these three accounts? So, the rule for personal account is debit the receiver, credit the giver. If the person is receiver, then he will debit its account, and if he is the giver, he will credit that account. Okay, now real account. In real account, the rule is debit what comes in and credit what goes out. For example, if I purchase goods, then I am receiving the goods, that at that time what I am going to debit, purchase account. That means I am receiving the goods. Suppose any kind of goods that I am receiving, it is coming to me, that I am going to debit. And credit what goes out. Suppose if I am selling the goods, that means goods are going out of my business. At that time, that goods account will be credited. Now, nominal account. In nominal account, we record all the expense or income related transaction. We know that. So the rule here is debit all expense and losses and credit all income and gain. That means if any kind of expense or losses which I am incurring, at that time I am going to debit that amount, and if I am receiving any income or earning any kind of gain, that amount is to be credited. So we are clear with the rules of debit and credit account. So next time we will be continuing with some other topic. Thank you so much.